Welcome to OJ's Spin Money. Today we will look what happened in a week in the Indian market. When the global wind shifted, Indian market adjusted quickly. This week was a clear example. As President Trump's new tariff announcement hit global headlines and FE aspect their selling, Indian indices could not escape the pressure. But there was also a balancing act. Domestic institutional investors stepped up in a big way, preventing what would have been a much deeper fall. Here is how the week shaped up. The Sensex fell 2.04% from 82,102 to 80,426. Nifty also declined by 2.04% from 25,169 to 24,654. Rupee strengthened slightly by 0.11% and gold price slipped by 0.08%, reflecting a move away from the safe havens. And on the institutional flow, FA sold 19,570 crores, while DIA bought 17,411 crores. So, on the big picture, the market fell, FA sold heavily, but DIA inflows and sectorial resilience prevented the panic. For today's video, we will look into the positive stories, negative stories, global cues, key catalyst ahead, and at last, I will wrap up the video with the key takeaways and the risk checklist that should be noted. First, I will start with the positive stories. Now, let's move into the positive stories that emerged despite the overall weakness. On positive stories, first we have the infrastructure, where L&T gained 2.34%, supported by the strong order books and improving project execution. Investors saw this as a sign that government-backed infrastructure remains a stable opportunity. And on banking, Kotak Mahindra rose 2.67%, while SBI and Axis also added the gains. And the optimism came from the expectation of RBI rate cut and improving asset quality. And on auto, we have Maruti Suzuki, which climbed 2.14%, while Tata Motors added 1.29%. Both supported by the festive demand and improving sentiment after the supply concern eased. And on the FMCG, the ITC gained by 1.07%, proving that defensive play continued to attract the investor during the volatile week. Together, these pockets of strength help to balance the broader weakness, showing that selective opportunity remains even when the index's trend is down. Next, we will go to the negative stories. The week also defined by the clear sectoral pain points. And the first pain point is on the Pharma. The Pharma collapsed by 8.20% after a Trump announcement of 100% tariff on the branded pharmaceutical imports. The concern spread across India's 25 billion pharma export industry. Next on the negative story, we have the IT, where Tech Mahindra fell by 3%, TCS lost 2.96%, Infosys slipped by 2.76%. This is due to the combination of visa fee and tariff fear hit the sentiment hard. Next on the auto, it is a mixed trend. While Maruti and Tata Motors gained, Mahindra and Mahindra declined by 3.72%, raising a concern about the rural demand. And on the market breadth, out of nearly 3,000 traded stocks, only 785 advanced, while almost 2,000 declined. Next on the negative stories, we have the volatility. The India VIX rose by 7.79%, signaling investors' nervousness. So to summarize the negative stories, the Pharma and IT bore the brunt of global policy shock, and auto showed a split trend, and overall market participation was weak with the volatility climbing. Next, we will look into the macroeconomy. Now let's broaden the lens and look at the global picture. On United States, Dow down by 0.1%, S&P 500 fell by 0.3%, and Nasdaq lost 0.6%. pressured by the valuation concern in the tech sector. And on Asia, Japan's Nike slipped 0.8%, Hong Kong Hang Seng dropped by 1.2%, and China's stimulus failed to lift the sentiment. On Europe, FTSE down by 0.4% and DAX down by 0.5% as a weak manufacturing data and higher energy cost hurt the confidence. Back in India, the rupee is strengthened to 88.7 on trade balance expectation and the RBI support, and gold declined slightly as investors shifted a position ahead of the central bank meeting. So in summary, the global market was broadly weak. Asia and Europe also remained under the pressure. And in India, the rupee's resilience stood out even as the equities corrected. Next, we will look into the key catalyst ahead. Now let's look at the triggers investors are watching closely. First one is the RBI MPC meeting, which is to be held at September 29 to October 1. The market expected a 25 BPS cut to 5.25%, where inflation at 2.1% gives room for easing. This could boost bank and liquidity. And next key catalyst ahead of US Fed meeting, which is to be held at October 28 to 29. And there are 89% probability of 25 BPS cut. The global liquidity direction will depend on this move. Then on October onwards, we are expecting a Q2 results from the various companies such as TCS, Infosys, Nestle and HDFC Bank. And on this, IT earning will test the resilience under tariff and visa concern. Banking and consumption will show the domestic demand strength. So next 4 weeks are packed with the catalyst: domestic rate decision, global liquidity trend and corporate result that could shift their sentiments decisively. And at last, I like to close this video with takeaways and risk checklist. First, we will look into the key takeaway for this week. Sensex and Nifty down by 2.04% this week. And the second takeaway is FA sold 19,570 crores and DA bought 17,411 crores. And on third, infrastructure and banking were relatively the outperformer, whereas Pharma and IT hit by the US tariff and visa policy. And on next, we have the rupee strengthened and the gold slipped marginally. And the next one is RBI rate cut expected, inflation supportive at 2.1%. And on Nifty, the supports level are at 24,500 to 24,600. Which remains intact. Next, I will list you the risk checklist. The first risk is the escalation of a US-India trade tariff, and the second is break below 24,500 support on Nifty. And the third key risk is the sustained FA outflow about 20,000 crores weekly. The global recession risk impacting the exports, and the crude oil shocks from the geopolitical picture. That's the full weekly wrap-up. Stay informed, stay disciplined, and invest wisely. If you found this briefing helpful, smash the like button and share it with a fellow investor, and don't forget to subscribe. I'm always open to the feedback. Please provide your valuable feedback in the comments.